So with that out of the way, I'd like to bring us back to tonight's webinar. Before we start, just some quick disclaimer. Information shared today is for educational purposes only and is not a recommendation to trade or invest in any specific asset class or stocks. So do your due diligence if you are interested to make any financial decision for yourself, and also check with your licensed financial broker or planner. So with that out of the way, just a quick admin, we will be happy to take any questions that you have. So if you have questions, just feel free to key in the Q&A box on Zoom and we will come to them. If you want to speak out directly, you're more than welcome to. Just click on the raise hand icon and I can unmute you to speak and ask a question directly. Avoid putting question in the chat box because it can be quite difficult for us on this side here to look out for the questions. Chat box is more for comments, feedback if you want to, but questions do put in the Q&A box. So with that out of the way, I'd like to introduce our guests for today. We have Marcus, VP of Cross-Asset Listed Distribution for SocGen, who is the issuer for DLC. And we have Chua Wei Ren, who is a CMT Certified Technical Analyst from the research of CGS International Singapore. So with that, I'll pass the stage now to Wei Ren. Wei Ren will start the session. Thank you.
Thank you, Nixon. All right, so I think my presentation will be relatively short today. Just share, okay, so where's the fund flow going to? I think the US market has been performing badly since the start of March. It has already corrected, I would say 20% from the top, and then confirming the double top formation and as such. I think a lot of large caps like Nvidia, Microsoft, Amazon, Meta, all these with the US DLC that we did last time. I think last September or last November, I think all faces a divergence, a correction down, all the way down. So I think so where's the alpha now? So I think the alpha now, I think could be in Hong Kong and China. I think given the rise today very, very strongly, we can see that Xiaomi actually pick up. You got 981 Hong Kong. There's a SMIC. All right, all these are picking up as well. So if you look at what is happening in the US, right? First of all, we look at the yield curve inversion and how well it has performed it. All right, so if you can see that the inversion has already started in before pre-dot-com period, all right. There is during 1999 to 2001, you can see that there was a bout of inversion in 1994. Market went all the way up and then came down, and then have the steepest inversion back here. All right, so when the inversion happens, market usually correct and go into a range bound that you can see during 1999 to 2000. So market make a peak. If my memory serves me well, I think it peaks during the mid of 1999 all the way to 2000, and then you can see a consolidation like what happens in the period of 2023 before there's explosion to the upside again. All right, so recession started in 2001, and then you got the Twin Tower incident, and then you can see all the correction down all the way to 2002, and then before the market have a 6 years of rally backed by mortgage-backed securities before bear stearns, and then followed by Lehman Brothers collapse. All this you can see that the 2-year and 10-year spread actually have inversed very significantly. All right, we got one in pardon my typo, is 2019. Where Federal Reserve actually raised rate to counter when the inflation actually was hitting near to 2%. All right, and then coincidentally, I think COVID happened. There was a sharp drop from February to March that caused a recession, a very short one, before market rallied up from all the way from the low of I think it was like 14,000 all the way until 39,000, around close to 45,000.
Excuse me, Wei Ren, sorry to interrupt. Your mic is a bit soft. So
okay.
Okay, great.
It's better now?
Much better, much better. Thank you.
Okay. All right, so inversion, and then after that, market came up. But if you can look at that, normally when the inversion happens, market usually trends. All right, when does the market actually has a very sharp fall? Is during the period where it accelerated, goes back to normal, where the 2-year, 10-year spread goes back to normal, and then that's where the market goes back. So due to time limitation, I do not have the time to explain why it does that, but it's due to all the fund flows and you play. All right. And second thing, I think rate cut. I think last year, I think Jerome Powell actually performed rate cut. So with rate cut, I think every time when there's a 3-year cut, there is a possibility that possibly the market correction. You can call it recession, but for now, I don't think that we call it a recession for now. You see that every time it had a rate cut or a rate pause followed by rate cut, we see a correction follows thereafter. So this time round, it doesn't surprise me. We do see a dip, a rate cut. So that's why I think Powell is very wary of how the market performs. He want to leave more room for rate cuts to happen. Should there be any slower growth, I think slow GDP quarter on quarter, technical recession on this, then he might consider rate cut. So for that, I think the correction is imminent, but I think that we are near the support right now. So maybe a short-term bounce is likely to come in. Maybe from May onwards, during earnings seasons or in June, but usually May or June, the market performance is relatively weaker than expected. All right, so I did a study. All right, the 10-year Treasury versus S&P 500. With S&P 500 more closely related, correlated to the 10-year Treasury yield compared to the Dow. Although I do like to use the Dow, but for this, you can see that the relation of the 2-year, the 10-year Treasury spread, like when the money is flowing, I think you can see that it peaks in October 2023, where people where there's a exiting of where there's where yield was dampened due to the fact that there's expectation during the time, if memory serves you well, that there's market expectation that Federal Reserve is going to cut rate.
Yeah. Hey, sorry, Warren Nixon again. Sorry. I think there's still feedback that your mic is a bit soft. Maybe you want to wear your headphones so that the mic stays close to your mouth. Yeah.
Okay. Is that okay now?
Okay, that's better. Thank you.
Okay. There is a first up. There is a peak in there, and then there's a correction. Due to the fact that the Federal Reserve is market is expecting a Federal Reserve rate cut on that, and then before before market actually price in. All right, so you can see that that's why during 2023 October, market actually had take on from there as a steady bull all the way until 2024 end, when Donald Trump took over as a reign of the president of the United States. This time around, it peaks, it differs, so I think there's it span off a sharp correction. This time around is due to the fact that there is a rush into bond yield prices into is risk off, and then people are rushing in to have a safe ever access in the 10-year Treasury bills. You can see there's a sharp increase yesterday. Reason being that there's speculation that the Chinese actually have sold on a significant portion of the Treasury yield, and then causing a reaction on that. But market still corrected itself. All right. So with this, I think market may continue to go down. So it brings me to my next point, that the Hang Seng index actually may see the bottom already. This is a monthly chart ranging from 1999 all the way to 2004 and then recent time. Despite the correction, I think you can see that evidently that we can see a higher high, higher lows, and then we do see a climax, and then there's a spring supply test coming down and then forming a double bottom. So if any correction, I think that 16,000 will be well supported, and then bring up to the next one. All right, long term wise, I think that for the next maybe 3 to 5 years, we could see Hang Seng Index coming back to the 30,000 level again. All right, first of all, from the technical perspective, we are nearing the low of the market. Second, I think if you look from the long-term stochastic, we are looking at an oversold season on that. All right, so there may be a upside on this, and then carry on to target the 30,000 level. All right, so if you look at how the Hang Seng Index is performing, all right, you can see the uptrend channel has been on since Jan 2024. All right, despite a very strong gap down, but actually it's still respected within the upper slope of the channel. If you take from the low to the high, we are actually in the deeper retracement level of 88.6, which is shy of 20,000. Is looking at 19,379 level going forward. There's a piercing line. Candlestick, I think prices do edge high, slightly higher, forming a close to a engulfing pattern. All right, so there will be a likely a upside going tomorrow. If we can break this level around 21,000, we'll be set for a bull run as well. But if market decided to do a one more low or miss open higher, take out the weekends or failing to clear over here, there may be a correction down to 18,669 level before attempting a rebound. So if you are doing a DLCs on this, I think you could take note. I think we do offer this. You can take note of the long and short. I think you can do it within a day. If you think that expectation is up, you can do just one day to target this. I think you could, I think you can generate some alphas from here. Otherwise, you think that there is a downside, I think you could short it and then buy back over here again. So you could leverage on the on this. But all in all, I think momentum wise, looking very bearish. But as again, I think indicators are very lagging. So we still need to look at how the price action is performing going forward. All right, so I think the China Enterprise Index, I decided to use the weekly chart. You can see that is well supported above the weekly cloud, and then well supported above the 7,000 psychological level, which is, by the way, the V-shaped rebound double bottom over here, this level. It has already cleared the resistance prior to that in early March, and then closing above 7,885. 7,858 levels, and then before correcting. So I think that the correction, I think is still a very deep correction, given from the rally in the start of 2025. So I think that there's a way to the upside again. So far from the weekly momentum, other than the 23 period ROC and the short-term directional movement index, all the long-term indicators are still showing very strong momentum going forward. So that reiterate my point that the Hang Seng, whether it's Hang Seng Index or Hang Seng China Enterprise Index, we are looking for long-term upside targeting. So for HSCEI, for 3 to 5 year period, we are looking at 11,000 or 11,500 level. All right, last one, I think Hang Seng Tech Index, Hang Seng Tech Index relatively was performing relatively strong. It was the one that leads the rally compared to Hang Seng Index. So we can see that it has already broke out an accumulative range last year. All right, in the September period before embarking on a correction. So you can see that despite some overheated and overbought scenario, it corrected down, and then but we can see that it found a support, and then over here at 4134, going up to the upside, and then there's a correction down again. All right, so with that, I think will I take a summary before I go into the live charts on this. So what is the summary? I think this first half of the year, I don't think that we are looking at a potential US equities. I think that won't be. I think US equities will continue to see slight weakness. A lot of time I thought there is a bottom, but bottom may not be here soon. I think if I look from a chart later on, when I do the Dow Jones industrial average chart, I think we are looking at from the arrow wave perspective, we are looking at a 3-wave correction. So in fact, I think maybe end of this week there may be a bottom, but I don't think the upside will last. All right, so the next one, I think that there is a flight to safety, like what I mentioned, from equities to risky assets, treasuries, a 10-year treasury bill or corporate bonds. I think riskier bonds are triple B corporate bonds are actually are actually in as well. All right, so but there's a fact that large institutional funds are mandated out not to hold and exit certain amount of cash. So there's a need to find alpha. Usually, you know that there's some cyclical rotation. So in the US, I think from tech, I think they are going into like defensive, like consumer staples, healthcare, like such as Coke, P&G, Kroger supermarket. I didn't put Walmart because Walmart is very tariff driven. And then J&J. J&J dropped because of recent lawsuit, and as well. So it had a sell down from the large range of a 2-year range. At the top, I think it was 160. It came down. So I don't think that the monies are in the defensive. So therefore, I make a conclusion that perhaps alphas are flowing to first India, and then Japan is one of them. Korea and Hong Kong and China. All right, Hong Kong being the top one, and then India followed by second one. So because India is cheap as of now, but we won't touch on India because I think India's market is very hard to access unless you can buy the ADR like HDB, HDFC Bank in India itself. But otherwise, we'll focus on the Chinese market today. All right, we are bullish. I think with the SOEs, I think there's massive influx of liquidity into the SOEs. Share buybacks are Xiaomi, Ping An, Tencent as SMIC. There is semiconductor okay, never mind. Ticker code is 981. All right. So with that, I think this is my slide. I think I will just try to share with you before I pass to Marcus a very quick one. All right. To see the market itself. Okay, so like what I said, I want to go through the Dow. The Dow, how is the Dow performing? You can see that the Dow actually I mark up, I think ABC, we have a corrective wave of 3-way pattern after confirming the downside. So we are nearing the 1.618. So instead of ABCD, we are looking perhaps of wave 1, 2, 3, perhaps one more correction upside around to 40,000 before a sell down. So main support I'm looking at maybe will be at 36,000 level or even lower at 34,384. If you look at everything, if I look at the CFD, I think Nifty is one of them. I think DJI. Okay, so if we look at the weekly chart, we are perhaps looking at a breakdown of we have already break this structure, this level, holding well. Was holding well like the past 2 days, but there was a slight sell down. So where do we look for next? Will be likely maybe a deep retracement level from 88.6. So we are looking at perhaps this level. Okay, so let me just perhaps at around 34834 to 33190. That's the main one. If 37,600 is being broken. All right. I think I want to highlight is Xiaomi. I think Xiaomi near term wise, we do see a break down, but I think with this bullish inside bar confirmed with outside bar as well, closing above the resistance at $40, I think there is a room for further upside. Otherwise, I think if there's any sell down due to tariffs that is mentioned by the Chinese on the revenge trade on the US itself, I think we could look at $31 and $32.55. If you look at Xiaomi on the longer scale data, I think I'm looking at a long-term play. All right, if it says sustainable, which at the moment it does at 36.2 or can go lower, I think I'm looking at ultimate long-term target at $156.50. Actually, it's $157.20. But yep, what we'll do. So how do I derive from this? I think is the 1:1 target of the double bottom itself. All right. Okay, so next one I'll go to the other than Xiaomi. I'll go through NVIDIA. I think this part of it, I think everybody are looking at it. You can see that Nvidia is one large range bound trade that is over here. Came down. There's some buying pressure for the fact that not because it's good, but because there is some key support over here that we can see. All right, there's key prime pressure at the low of $90 short of it, and then came up. Yesterday was good. But I think confirming this oversold, but ultimately I think market will just make one more downside. If there is a break, I think there is a chance that you may go to 76.39. But if it rise, I think I'm looking at 112 to short it on this. All right, due to the fact that it's now clearly on the bear trend. Yesterday it fails to close above the resistance high of this level at 104.30. So I think for that, I think Nvidia is going down further. All right. So next one, I think Amazon. Before I go through much more Amazon as well, I think bearish piercing line, a clear breakout of uptrend line, downtrend is in. Despite being oversold, I think you can see that it's being corrective in place. So I think it might just go down lower. To test, I think perhaps this level at 149.12. All right, so go on to some of the Hong Kong stocks that I think that there's potential will be Tencent. All right. Initially, no bearish divergence on any part. I think there's just gap down, but like what the Hang Seng index is closing above the 419 level, and then going to the upside again. So I think there's a fact that there may be a closing to the upside. I think first up, I think uptrend line over here is still remain intact. Taking out the Ichimoku, if we use the moving average, is still above the 252-day moving average as well. So using using the moving average rule, we are still on the major uptrend on this. So I will still very much hold on to a buy for Tencent. I think given the fund flow, I think that mega caps is on as well. All right, so next one will be on Ping An Insurance. Okay, so also as well came down, I think, but you can see that it's being well supported at this level. I think 39.80, double bottom, gap down, but still sustaining. So I think that may be a corrective upside again. So short term, I'll look at maybe 44.15 or $47 going forward. Still, I think it went back up to the uptrend line. So I think that there's a possibility of continuation or upside again. Next one will be on Meituan. Meituan, one of the steadiest one. I think given the fact that it do have routing top, came down, but still very much supported above it. And then you can call this a double bottom. And then we might see an upside going forth on this again. All right, so maybe looking at 181 and 1200 over the longer term period. All right, last but not least, I think looking at the SOE banks. All right, Bank of China. Okay, Bank of China as well. Selling seems to be halted, still within the Ichimoku cloud. Despite being overbought, I think still maintaining the upside again. So if we look at the weekly chart, uptrend still very much on the steady uptrend on the upside. And then I think that there's a potential that we might retest $5.22 again. All right, so I think that's all for my sharing. I see some Q&A. With the recent day, is there any key figure able to support on trend? I think I answered that in my slide already. YY. All right. If there's any question, type in this thing. After that, if there's time, I'll still answer your question. All right. Thank you. All right, so I think that's all for my sharing. I shall pass my time to Marcus for the sharing of DLC. So shall pass to you, Marcus. Thank you.
Yeah, thanks for Aaron, and thanks to CGS for inviting Chen to share more about the instruments that we have listed on the SGX securities market. So I hope everyone can hear me clearly. If you're not, please do raise it in the chat. You can hear me clearly. All right, so in the next 15-20 minutes, I just want to do a very, very quick introduction of this product called daily leverage certificates that we have listed on the SGX securities market. All right, so this is our website, dlc.socgen.com. All right, so this website is where we can find all the information, the full list of DLCs that we have, all the educational resources, all the information that you need on the DLCs can be found here on our website, dlc.socgen.com. All right, so Firstly would be, what are the daily leverage certificates? What is a DLC? Secondly would be how to select the DLC to express my trading view, right? And lastly would be, what is one key thing that you need to know about the DLCs before you even start trading the DLC. Okay, so let me go through these three in very quickly in the next 15 to 20 minutes. First, what is a DLC? All right, so DLC stands for daily leverage certificate. All right, it is a financial instrument that is listed on the SGX securities market. So this DLCs is a structured product that's listed on the SGX. For us, SocGen, we are the issuer of these DLCs. We issue the DLCs and we list it on the SGX for investors to buy and sell the DLCs to express their view. All right, so the DLCs is an instrument that tracks an underlying asset, whether it's an index or a single stock. All right, so we have over 200 DLCs listed on the SGX securities market, and they track a wide range of Singapore, Hong Kong, and the US indices and single stocks. All right, so the DLCs are a fixed leverage instrument in terms of its payoff. It gives you that 2 times, 3 times, or 5 times, or even 7 times fixed leverage performance on the underlying asset's daily percentage performance. All right. So this one is a fixed leverage instrument, very much similar to your leverage and inverse ETFs. So those of you who are familiar with the TQQQ or the SQQQ in the US, the ProShares Ultra Nasdaq 3 times long and short ETFs in the US, the DLCs have exactly the same kind of payoff as that, as the TQQQ or SQQQ. All right, just that we are in a certificate structure and not a fund structure. Therefore, we can go higher in terms of its leverage. We go up to 3 times, 5 times, 5 times or 7 times. Whereas for leverage and inverse ETFs, it's always around 2 times or 3 times maximum only. All right. So the DLCs, the payoff is very much similar to an LNI ETF. It gives you that fixed leverage performance on the underlying assets, daily percentage performance on a close-to-close basis every single day. All right. So the DLCs are listed on the SGX, so you can trade them through any regular stock brokerage account. So if you go to your iTrade trading platform and you look for the DLC stock code over there, you should be able to see and trade the DLCs on your iTrade platform. All right. So you don't trade the DLCs on SocGen website, etc. All right. You find the DLC information, the stock code, the name, etc. And then you go into your iTrade trading platform to trade the DLCs over there. All right. So the DLCs, you trade them the same way that you trade a share. All right. Or DBS share or UB share, the Singapore shares. You trade the DLCs the same way as you trade the Singapore shares. Okay. For this DLCs is issued by SocGen and listed on the SGX securities market. We are also the designated market maker. All right. So we provide the liquidity throughout the SGX market trading day for you to buy and sell the DLC. All right. So we will provide that bid and ask prices, bid and ask volumes throughout the trading day, 9 a.m. to 5 p.m. for investors to buy and sell each and every single one of our DLC. All right. So the liquidity is in the bid and ask prices, bid and ask volumes. It's not necessarily in the turnover. All right. So even though a particular DLC might have 0 traded value for the day, for that particular day, the SocGen, we are still obligated by the exchange to provide liquidity on the bid and ask prices and the bid and ask volumes for investors to buy and sell the DLCs, even if there's 0 turnover. Okay, so the DLCs, come in 2 types of DLC. One is a long DLC and a short DLC. So if you are bullish on the underlying stock, you will buy the long DLC. But if you are bearish on the underlying stock, you will buy the short DLC. All right, so no matter what, you always initiate a position with a buy trade. You either buy the long DLC to profit when the underlying rises, or to buy the short DLC to profit when the underlying corrects. All right, so there's 2 types of DLCs, long or short DLCs, for you to navigate the market. All right, so markets are becoming increasingly volatile, these days, especially this Monday. So it really pays to have a long short instrument like the DLCs to navigate the volatility in the market, to capture short-term opportunities, even in a bear market, or even possibly to hedge your positions on your overall long-term investment stock portfolio. Okay, so the DLCs, I mentioned that the payoff is very simple, like a leverage and inverse ETF. All right, so every day the daily percentage performance of the DLC will equals to the underlying asset daily percentage performance multiplied by the fixed leverage factor. All right, so let's look at some examples over here. Just now, the focus today is on Hong Kong. All right, Hong Kong, China market. So let's look at this. So if you go to our product search page, all right, product search page, that's where you see the full list of the almost 200 DLCs that we have listed on the SGX. Right, there's an underlying over here, the underlying filter over here for you to choose between a wide range of US, Singapore, Hong Kong indices, or even US, Singapore single stocks as well over here. All right, so we have a long list of wide range of underlying assets that you can gain exposure to using the DLC. All right, so for the indices DLCs, it's all capped at 7 times leverage. All right, it goes up to 7 times leverage. So we have 3 times, 5 times, or even 7 times leverage for the index DLCs. For single stock underlying DLCs, it only is at 5 times leverage. Okay, so if you want to say again exposure to Hang Seng Tech Index over here, you will look for Hang Seng Tech Index, and then you will choose whether you want a long DLC or a short DLC. All right, if you're bullish, you buy the long DLC. If you're bearish, you buy the short DLC. Remember that. All right. So if I want to go long on Hang Seng Tech, for example, and I want a leverage factor of 7 times leverage. All right. So I will search here, and you can see that there's 3 Hang Seng Tech 7 times long DLCs over here. All right. So let's just go into one of them, WHYW. So if I click into this link over here, it will go to this page, which is the individual terms page of the DLC. All right. So this is our Hang Seng Tech 7 times long DLC. The stock code is WYHW. All right. So if you go to your iTrade platform, look for WYHW, you will be able to retrieve this Hang Seng Tech long DLC and trade it over there on your iTrade trading platform. All right. So the name of the DLC also starts with the underlying asset, what it tracks, followed by the leverage factor, and then whether it's a long DLC or a short DLC, and then SG, which stands for Society Generale. All right, we are the issuer of this DLC, and then the expiry date in year, month, date format. Okay, so over here you can see that Hang Seng Tech today did rally up 2.6% today, and so that's where your 7 times performance is, because this WHYW was up around 24%. All right, up around 24%, 7 times that of the underlying index performance today. All right, so you can see how that the Hang Seng Tech Index, Hang Seng Tech 7 times long DLC WHYW tracks the underlying index throughout the day on an intraday basis. For this chart, you can also see the 2 days, 5 days, or even 1 month or 6 month time frame to track the performance of this DLC. Okay, so the price of the DLC is over here. All right, you can see the bid and ask price, prices that we'll put up during the day is over here. Right, market is closed now, so this number is a bit off. All right, but you can find our bid and ask prices over here, and that's the price of the DLC. Okay, so this price of the DLC will track the underlying asset closely. If underlying index goes up by 1%, this price of this DLC will go up by 7%. Basically, that's how the DLCs work. Underlying move 1%, this 7 times long DLC will move up by 7%. All right, but correspondingly, if the underlying index goes up by 1%, the 7 times short the Hang Seng Tech DLC W8OW would go down by 7%. All right, so that's why today the 7 times short DLC W8OW declined by around 24%, 7 times that of the underlying index percentage performance. All right, so that's where the inverse relationship is. If underlying index goes up, my 7 times times short DLC will suffer. But if instead the index declined today, then my 7 times Hang Seng Tech short DLC would gain in value. Okay, so the DLCs are generally priced between under $2 or around there. So it comes in minimum dollar unit size of 100 units. So you can buy these DLCs at as little as a few $100s. So definitely, that's why people tend to like to use the DLCs to gain exposure to Hong Kong stocks, because you can gain exposure to Hong Kong stocks, Hong Kong indices at a smaller fraction of its cost. You can do it in smaller ticket sizes, and then with smaller capital being used, you also save on your transaction costs. All right. So most popular shelf has been our Hong Kong indices and Hong Kong single stock DLCs. So do check it out. I think you'll surely be realize soon enough why people like to use the Hong Kong DLCs to gain exposure to Hong Kong market. All right. And also particularly if you are an active trader, you will want an instrument like this to be able to have that capital and cost efficiency. Okay. So I've gone through a bit of the basics of the DLCs. All right, how does it work? How you track that underlying index with that 5 times, 7 times performance on a close-to-close basis? Let's look at how to select the DLC for your target exposure. All right, so let's say I mentioned Hang Seng Tech Index, right? Let's look at Hang Seng. Let's look at Alibaba, for example. All right, Alibaba. Let's look at Alibaba. So over here we have long and short DLCs. Say I want to long Alibaba. There is 3 Alibaba long DLCs that we have listed on the SGX securities market. All right. So how does it work? All right. Which one should I choose? Which Alibaba long DLC should I choose? All right. If in doubt, always look out for the red star indicator over here. All right. The red star indicator will tell you which is the most sensitive DLC to the underlying movement. All right. So all 3 5 times long Alibaba DLCs will give you that same 5 times performance of the underlying stocks' daily percentage performance, but they are all at different price range, all right? And that affects the sensitivity. One is at the 30 cents price range, one is at the 9 cents price range, and one is at the 2 cents price range, okay? So when it's a different price range, you have different sensitivity over here, on the column over here. Generally, the lower the sensitivity number over here, the more sensitive the DLC is to the underlying stock movement, all right? What I mean by sensitivity over here is that sensitivity refers to how much of the underlying move before this DLC can actually move by one minimum tick size. All right. Over here at the 9 cents level for DKPW, one minimum tick size is 0.001. All right, 1/10 of a cent. Whereas for this DISW, long Alibaba DLC, at a 2 cents level, minimum tick size is also 0.001. Okay. So over here, minimum tick size is 0.001. But you can see that 0.001 divided by 0.09 is a smaller percentage as compared to 0.001 divided by 2 cents, right? 0.001 divided by 2 cents is a much bigger percentage as compared to the 9 cents level or even the 30 cents level. And therefore, it requires a larger movement on the Alibaba stock. It requires a $1 movement on Alibaba stock before it can even move one tick over here. Whereas for DKPW, it requires a 24 cents move on Alibaba stock before it can move by one tick. All right. So even though all three will still give you the same 5 times performance, for a given amount of movement on Alibaba stock, this DLC DKPW can move more number of ticks or more number of minimum bid sizes, which gives you a larger trading range. All right. So for those who are active traders, definitely you want to choose the most sensitive DLC so that you can enter and exit easily. For a small movement on Alibaba, you can enter and exit your position easily. Or if you're a scalper, you could even definitely want a more sensitive DLC. So definitely for a better trading experience, look out for the red star indicator for a more sensitive DLC. All right, don't choose those very low price ones. Those below 3 cents or 5 cents are very insensitive to the underlying stock. Generally, the higher price the DLC, the better it is. All right. So let us look at Xiaomi as well. All right. So generally, the higher price DLCs are the ones that are the more sensitive. Over here is two Xiaomi long DLC. The 90 cents ones is definitely more sensitive than the 15 cents one over here. Okay. But generally, I think between 10 cents to $2 range, they are all pretty good DLCs. But those that are below 10 cents, try not to touch them anymore as they become insensitive very fast. All right. So Alibaba and Xiaomi is some examples over here of Hong Kong stocks you can gain exposure to using the DLCs. Today, Xiaomi is one of the top performers. It's up 7% or close to 8%. And so the Alibaba long DLC DKRW was up around 40%, while the Xiaomi short DLC was down around 40% as well as LRW. Okay, so remember to select the right DLC for your target exposure. Always choose the more sensitive one, and you can always look out for the red star indicator for the more sensitive DLC over here. Okay, so we've covered what is a DLC. We've covered how to select the right DLC for your target exposure. All right. Before I go into the last part about my presentation about what is the one most important thing you need to know about a DLC before you start trading them, is firstly, I just want to make sure here that everyone understands that the DLCs are short-term trading instruments. All right, it's a short-term trading instrument for you to do a intraday trade. You saw the 40% gain on Xiaomi just now. Intraday you can make 40%. That's why a lot of people do use it for intraday trading as well. Intraday trading for overnight trade or trading it for a few days or a few weeks. But definitely please don't hold on to the DLC for months at end or even a year. All right. This is a short-term trading instrument that you can use for a very short-term trade, intraday, a few days or a few weeks. But definitely, we definitely do not recommend that investors hold this for more than a month on the DLCs. All right. The main reason why I say you cannot hold it for too long is because of the one thing that I want to share with you before I end, and the most important thing you need to know about the DLCs before you trade the DLCs is because of the compounding effect feature of the DLCs. All right. So under the education tab, you can find the compounding effect feature of the DLCs over here. The compounding effect feature is very common in all fixed leverage instruments. Even your TQQQ or your SQQQ leverage and inverse ETF in the US all have this compounding effect feature. Right, the compounding effect feature can work for you in a nice trending market, but it can work against you in a sideways or volatile market. So this example over here, the Hang Seng index was up by 2% for 3 consecutive days, so giving a cumulative gain of 6%. Every day, my 5 times long DLC will gain by 10% because underlying up by 2%, every day 10%. But cumulatively, it gains 33%. All right, more than the 5 times performance of the Hang Seng index of 6%, times 5 is 30%, but the DLC gave 33%. That's because of the compounded gains. Every day, my gains and losses are locked in. So the 10% gain on day 2 and day 3 are based off a higher base and a higher base and a higher base, to give you that compounded gains. And that's why the DLCs work very well for you in a nice trending market. You will get more than the fixed leverage performance of the DLC. All right. But where it doesn't work so well for you is the volatile market or sideways market. All right. So over here, the Hang Seng Index is down by 3% on day 1, down by 4% on day 2, and then up by 9% on day 3. Every day, I still get the same 5 times performance, 15%, down 50%, down 20%, up 45%. But cumulatively, the 5 times long DLC actually suffered a loss of minus 1.2%, even though the Hang Seng Index ended off the 3 days with a 1.5% gain. All right, so that's where the compounding effect will not work so well for you, because your losses on day 1 and day 2 are locked in, and then your 45% gain on day 3 is based off a lower base of $1.70. Therefore, you get less than the 5 times performance because of the compounding effect. All right, so the compounding effect feature is the reason why you should not be holding on to this DLC for long term. All right, because in the long run, markets are not in one direction only. In the long run, markets are actually sideways. All right, and the DLCs don't work well in a sideways market. All right, so the longer you hold the DLCs, the more you're at risk of it becoming a sideways market, and therefore the compounding effect feature will not work so well for you. All right, so intraday, a few days or a few weeks, that's fine, but please do not hold on to the DLCs for too long. It is a short-term trading instrument. Okay. All right. So the DLCs is really we've seen a lot of people trying to use the DLCs in the recent days, in recent months, because of the volatility. Hong Kong market rallied very hard, but now it's starting to correct quite hard, and the US market is trying to correct very hard as well. The US market is something that is really experiencing a high extreme volatility these days. All right. So the US market, we have US stock underlines, we have US indices underlines. So I mentioned that we have the NASDAQ exposure to NASDAQ DLCs. All right, this is the 7 times long, 7 times short NASDAQ DLCs that we have for you to gain exposure. So overnight, on a close-to-close basis, we will track the underlying NASDAQ 100 index with that 7 times performance. And then during Asian hours, we will track the E-mini futures, all right, that trades 24/7. We also have the single stock DLCs. Tesla, Nvidia are our most popular underlines. All right. So Tesla, Nvidia DLCs, but you only add 3 times leverage. All right. So the US stock DLC is something new that we've introduced that gives you Asian hour exposure to the US stocks. All right. So these ones are 3 times leverage, and this is the Asian hour price. You can see that this was the price of Tesla as of 5 p.m. today. So between 9 a.m. to 5 p.m. Singapore time, these US stock DLCs are tradable and give you exposure to the Tesla stock price movement during Asian hours. All right, so this is something that is quite interesting. In the case of any Asian hour, high impact news during Asian hours, you can use this 3 times long, 3 times short Tesla DLCs, or 3 times long, 3 times short Nvidia DLCs to manage your exposure. Okay, so under US market tab, you can find more information about the US stock DLCs and the US indices DLCs, which is really quite interesting. Okay, so last thing for this, I want to end off with definitely too short a time to explain everything about the DLCs. All right, so I encourage everyone to visit our website, dlc.socgen.com, to learn more about the DLCs, and please feel free to call us on our DLC hotline, 62262828. If you have any questions or any feedback at all about the DLCs, please do reach out to us on our DLC hotline during SGX market hours, 9 a.m. to 5 p.m. My team and I will be on standby to answer any questions or feedback that you have. Okay, so thank you very much. I think we'll move on to the Q&A section of this presentation now.
All right. Thank you, Marcus, and thank you, Wei Ren.